Market Watch. Thank you very much for joining me. A quick one this week looking at three indices, the three big guys, the ASX Top 200, the FTSE and the Dow Jones. Why? Because the Dow Jones will usually influence the Australian market because we're really little guys compared to the American markets. They still have a lot of influence over us. And also the FTSE, they still influence us as well. So three indices, three very quick charts that we're going to look at. The first one being the ASX Top 200. Now, this little box right here is July 2009. This is our little breakout that we had a great 6-month bull run, a lot of gains to be made from July 2009 to January 2010. This is our long-term uptrend line, and this was crossed in January 2010 on January the 25th. Now, that gave us basically a bit of a correction, probably about a 10% correction on the Australian markets. And since then, what's actually happened is, if I can just enlarge that for you there, this is probably about 5 months worth on a daily chart. And this is basically a lot of sideward movement. Really, the market has snaked in this sidewards movement for around the last 5 months. And what I'm looking for a breakout, either to the downside, we'll be looking at a new bear market. If that were to happen, at this stage it's not looking likely, but if it were to happen, a breakout would be a close below 4,469. That would be our downward breakout and signaling a bear market. If we were to have a new, considering the market, the trend is still up, and a lot of people have been saying, if I were to just enlarge the space here, that this is actually looking like a continuation pattern. So very well it could be a continuation pattern heading north again. Remember guys, we still have the resistance at 5,000. So what I'd be wanting to see for some more upward movement would be a higher trough on a daily chart. So for instance, the market to come down here and then to travel back through the previous peak. So that would really sort of cement the upward momentum for me personally. In the meantime, the ASX market, it really isn't a sideways movement as far as I'm concerned. The FTSE is the next one that I'm looking at. Now this one is much more clear. It's such a pleasure to look at this chart when you compare it to the Australian chart, because there's no doubt about it. If you look at the analysis here, this is that crazy trend line that seems so simple and yet is actually so powerful to use. As you can see, it started in March 2009 back here. It's now bounced off that trend line twice. Oh, here we go, I already had that marked actually. But yes, as you can see, it bounced off it more recently in February 2010, and it's continued to go great guns. This is a no-brainer, guys. The FTSE is still in an upward trend. Very, very simple. And what we'd be looking for, if it were to reverse, we would probably be looking for the market to come back down through the uptrend line and then close below the previous trough. So really, it's got a lot of leeway there at the moment. You'd be looking at about 5,100 for that to happen. The market's currently around 5,600. So FTSE, no worries, uptrend, looking good. The Dow Jones was previously in a sideways sort of momentum. This downtrend line that you can see here is the longer term downtrend line. This was started from 2007 and it has gone all the way through to 2010. So it spans for 3 years, which is just fantastic, or about 2.5 years, which is great. And it would usually signal a lot of resistance. Now what's happened? The market traded above it, below it, above it, below it. It was really snaking around this trend line. It couldn't quite decide which way it was going to go. Over the last week, if I just enlarge that for you, it's just broken away from the trend line. I might just delete that, and this is our little area here. So it's really broken away from that downtrend line and it's heading upwards. So again, what we've been able to do because of that is to flatten our trend line, our longer term trend line, this little beauty here. So from March 2009 again, which was the bottom in most indices, and we've been able to flatten that so that now we have another beautiful uptrend line which will hopefully give us lots of support for the price in the future. So Dow Jones heading upwards, FTSE heading upwards, ASX top 200 trying to head upwards, but still in a bit of a sideways range, looking for a higher trough and then a higher peak on a daily chart. That would really cement my views on the ASX top 200. So simple. How easy is that? I mean, really, looking at the markets, it's you don't want to make it complicated. If you're going to spend hours and hours looking at the markets, what's the point? There's life out there to be enjoyed. You should be going out there and enjoying it. So keep it simple and make sure you know the trend and trade in the direction. If you want to learn more tools about how to look at the market and how to analyze the market and how to buy and sell stocks as well, really simple ways to do it, check out my website at www.asxmarketwatch.com. Also, we've just recently got a professional portfolio manager from Australia, Oliver Ward, who's looking at the strongest sectors in Australia and the weakest sectors. Go and check that out, because it will tell you instantly whether you're involved in the best or the worst sectors, and you can have a go at your financial planner or your stockbroker and say, hey, what's going on? Or you can maybe congratulate him because you are already invested in the best sectors. So go check it out. It's an absolutely fantastic tool. It's all free. And other than that, hopefully I will see you next week, guys, for another market watch, and hopefully the market is still trending beautifully, which is what I always like to see. All right, see you next week.